Working on?
Oh, hanging out with Brandon Turner and Brian Murray. I know. Sorry.
Yep.
You know.
Money Mondays, though. We do this every Monday, 3:30 Central, almost every Monday. And, for those of you that...
We're 99% of the Mondays out of every...
I think we've missed maybe 2 for the year. We've done this for about a year now.
Yeah, well, we're probably going to miss next Monday too, folks. But,
yeah, we all...
But that's because of July 4th. But, we will be back the following Monday and talking about some cool stuff about real estate.
Absolutely.
Right?
But with that said, we do this every Monday, 3:30 Central. We talk about a bunch of different topics. Today, we're talking about demographic trends to be aware of as a multifamily investor.
Yep.
And, we'll spend the first 15, 20 minutes talking about that. And then we'll spend the last 10 minutes or so doing Q&A topics of anything. So if you have questions, comments, feel free to suggest them. If you have topics for future ideas, let us know as well.
No, we want it to be interactive, folks. I mean, it's very important for us not to, just talk about everything that we want to talk about. We want to hear from our audience and what you guys want to hear about and what you guys want to talk about. And we'll get up here. We'll talk about anything from being an entrepreneur to tech to real estate, not just multifamily, to investing in general. So please, drop us a line, drop us a comment. We'll talk about anything you guys want. So let's get right into this. I got my coffee, as everybody knows, Starbucks, the good stuff. So demographic trends, all multifamily investors must understand. So this is not an all-encompassing list, right? We could talk about this for probably several hours if we really wanted to, but this is a 20-minute show with 10 minutes Q&A, right? So we're gonna blow right through this. These are some of the major things that we look for, right? So think job growth, right? I think that's probably the most important thing, right? Along with population growth. Those things kind of go hand in hand, right? So the more population moves in, the more jobs move in, more population goes in. They're very symbiotic in terms of, the growth rates. Most of the times it's gonna kind of go like this along with each other. But it's important if you see both of those, right? And people are always asking, why do you care about population and job growth, right? Because it ultimately drives demand for rental product, right? And whenever you increase the demand for your apartments or for your rent houses or whatever you're trying to lease out, right? That's gonna drive the price of the rent up because there's more demand versus supply, right? This is economics 101 stuff. And so population and job growth are going to really, really do that, especially, depending on the jobs that you're trying to cater towards, right? And, we always talk about, Fortune 500 companies moving here to Houston in particular, right? And people are like, well, you're not catering to the white collar upper management person that's, coming in and just renting for 6 to 12 months. No, I'm not. Of course not, right? But that person's going to go, buy a latte from Starbucks, is going to shop at Target, is going to go to the mall, is going to go to restaurants, right? Those are, for the most part, where the demographic of our Class C and B tenants are going to work at. So it all feeds together. So you want to see job growth across the board and ultimately understand that A-class tenants, even if they're not, at your property, right, they're going to be shopping in and around that area, and that's going to drive demand for your rental units. So those are probably the 2 most important metrics that we look at.
And it's important to look at, right? Because why? With all these things, you get more people that are looking to buy.
Yeah.
So as a seller, whenever you go to sell the deal, it's a lot easier, right? You get more people coming in. So that means, like Ben said, there's more demand, right? And ultimately, it's just a better, easier experience as an investor, right? Yes, you can make money in a Beaumont. We've made a lot of money in a third-party market like a Beaumont. Yes, you can make money in Detroit, right? In a place that's going negative. And it's not to say one is right, one is wrong, right? But it's ultimately, as an investor, you are looking to essentially remove as much risk from an equation as you can, right? To put more things in your favor. Because even if you buy that really nice deal in a great part of area, there's risk. Things can go wrong, right? But by buying at a nice deal in a nice area, you've removed a lot of that intrinsic risk. And so that's really the big thing to kind of look at here, right? And ultimately, I mean, we went to Atlanta 3 years ago. We've done very well in Atlanta. Why did we go to Atlanta? It had the population growth, job growth, the things that we're talking about.
Diversification of the economy.
And it had the right price point is the other piece, right? The prices made sense relative to all of that. And so we were able to ride that wave, right? That market really got hot. We got a lot of rent growth and really done well. But now prices are really elevated. So maybe we're going to make some exits and go elsewhere, right? But you really want to look for trends because trends help reduce risk.
Yeah, no, it's the most important thing, right? We're trying to de-risk, as our friend John Montero likes to say, deals, right? And when you have that demand in your area for rents, for rental products, that's going to take that piece of the risk out of the equation, right? So some of the other things that we're looking for, right? And a lot of this you're going to see in people's decks, or the brokers are going to talk about on their OMs. And so this is not like some earth-shattering data, right? But these are important, and that's the reason why a lot of people talk about them, right? Household income, right? And what's the rule of thumb here, right? There's really not, and ultimately the higher the better, right? It's like IRR, right? Nobody's gonna really, kind of get into the intricacies of IRR, but they're just gonna say the higher the better, right? Depending on what type of investor. But household income is important, right? Because you're trying to see how affluent the area is, and right? And, if your household income is, say 30 grand, right? You're gonna cap out at how much you can push rents in that area, right? Because ultimately, if you're doing 2.5, 3x income as your income requirement at your property, right? You can essentially back into how much you're going to be able to charge somebody before they're essentially going to be in over their head in terms of rent, right? They're going to be house broke, or in this case, apartment broke, and that, unfortunately, in this economy, in this market, is a big crisis that a lot of people aren't talking about, which is affordability. Right? So you ultimately want the median income or household income to be high, right? So you can ultimately fulfill your business plan and be able to push rents and not get butted up against, well, is this person going to be, house broke or apartment broke? And then ultimately, if they get behind, like what happened in COVID, right? Those people don't have months and months worth of backup savings or a rainy day fund. If they get behind 1 month, they're never going to get caught up again. And it's unfortunate that, that's how it is, but it is what it is. Right? So we typically like to see that, I would say we've gone probably as low as about 45, right? But we're buying a
40.
deal right now that we're at 132.
But the deal we did with a 45
ended up doing pretty well.
It's doing phenomenal.
Yeah, so that's actually a good point. So I want to point this out, right? Don't say that if one of these doesn't check that box, that it's a bad deal. Right? We're just saying you have to look at each one of these, and then ultimately it's a gut check, right? If maybe it doesn't have the household income, but you're talking about a market that's got job growth and population growth, maybe it's still a good deal, right? Ultimately, you need to look at the numbers. You need to talk with your property management company. You need to talk with, the people that are familiar with that area, and ultimately make that gut check. But I don't want you to feel like, if any one of those is off, then we're going to scratch the deal, right? Especially right now, as competitive as it is. You need to be looking at all deals, So household income. I'd also talk about the school districts that it's in, right? How highly rated are they? Or
School districts matter, because again, you have to kind of build that persona of who your renter is. Are you trying to build a family community?
Yep. Which we try to.
There are pros and cons to that.
Yep.
Are you trying to build a young millennial community? Again, pros and cons to that. But you got to have to understand who that persona is and then start to tailor to that, right?
Yep.
And so if I'm going for a family, I care a lot about the school district. I care for more 2 and 3 bedroom units than what, a 1 bedroom property. I want to make sure I have some amenities. Versus if I'm going something else, right? And so really understand that, and how the school district plays into that, how household income plays into that, right?
Yep.
All of those things help either fit or not fit your persona, and making sure that aligns with your business plan.
Absolutely. Right. So I think you need to look at that. We've got, families in our communities that stay at our properties just because the school districts are good, right? And they're essentially going to pay up to be in that area because they want their children to go to good schools, and that's nothing wrong with that, right? But that happens. And so sometimes there might be more demand as an investor, right, for that product because it's in that good school district versus, say, the subpar one. Right, so that's something that we look at, right? Once again, another thing that we just look at, not the end-all, be-all metric, folks, right? Crime score. I think that's an important thing, And there's plenty of these online, websites that you can find crime scores on. Once again, and you can find out if it's in the hood, right? You probably want to avoid it. D-class areas, we're definitely not going to be playing in. But, C, depending on what type of crime it is, right? Maybe it's going to be petty theft or something like that, right? But ultimately, the less crime, the better, probably, But once again, it's something that you're going to be looking at. And people always ask us, where are you getting some of this data from, right? There's several places, right? City-data.com is a website that we use quite a bit. And that will show you a lot of these metrics all in one place. It's free. The only downside of it is some of the data kind of lags, think a couple years. Right? So things might have changed, right? Especially with COVID and what happened in 2020, but it's probably the most, concise, all in one place, website that's free to access. It's all online, city-data.com. So check that out. CoStar, some of these axiometrics, sometimes they're going to have some of that information as well. Ultimately those are paid services, sometimes a little bit expensive. So take that into consideration if you would. But those are going to be probably the top 5 that we're looking for. So to recap, right, we're looking at job growth, we're looking at population growth, we're looking at household income, we're looking at the school districts, and we're looking at the crime scores, right? Those are probably the 5 top ones. Now there's dozens more. So this is not the end all be all
asset
list.
Condition, you're looking at who the buyer is, you're looking at who the neighbors are, you're looking at what the rent comps are. But Ben's right, those are the main things.
Yeah, these are the main kind of demographic.
100 other things to really
when it
know
comes to the area, right, and who's living there, those are probably the main ones that we're looking at, right? I would say the only other one that's kind of a holistic thing is a diversified economy, right? Once again, we did very well in Beaumont. We will do very well on our last deal that we're going to sell there too. But it's not necessarily a diversified economy. They're tied to a couple different industries, and if one of those industries kind of starts lagging a little bit, you might have some problem with the demand for your rents, right? And so whereas, say, a Houston, very diversified, or a DFW, very diversified, right? Atlanta, that's one of the other reasons why we liked Atlanta, right? And so it has made several major industries, and not any one of those is necessarily going to go away at all. And even if one of them starts lagging, you've got 4 or 5 other big ones that are going to continue to drive, growth there. And so that'd probably be the only other one. And that's kind of a more thing that you just have to kind of study the market a little bit, talk to brokers, talk to property management companies, understand what's happening in that area as far as jobs go, and making sure that you're not in a one-trick pony market, right? So I blew through that pretty quick, man.
That's good.
That Starbucks did a good job. Woo! All right. We're open Q&A time.
So Mondays, we do this every Monday, 3:30 Central. We basically will spend 15, 20 minutes going through a different topic. We're talking about demographics today, and really leave the last 10 minutes or so to kind of open up Q&A. Feel free to ask any questions you have about demographics, about real estate, about anything else, about how Ben lost his hair. All of those are fair questions to ask.
Oh, we had to get the ball joke in.
As you all know, it's a pretty open conversation. So, that's kind of, and then maybe the other thing I'll add to, in addition to demographics, really understanding the pricing. Because New York probably has really good demographics, probably has all those things you look for, but pricing is insane, so it doesn't make sense.
Yes.
Seattle, probably
back,
same
right?
thing. So there's that last component of, now great, that's a great area, period. Is it a great area to invest in?
Yes.
Right? Meaning I'm actually going to get some sort of return on my profit, so on my investment.
Yeah. I mean, you could go back to and landlord friendly, tax friendly, all those things too, right?
Yeah. If you have comments, questions, feel free to leave them.
Nobody wants to talk about demographics? Come on, folks.
No, I don't know what's going on.
Well, we were 5 minutes
let's
late.
see comments. So chat said, hello, Ben and Ferris. Hey, chat. How's it going?
Chad, what's up? What else? Anybody else?
That's it.
That's it?
Anybody else?
Oh my gosh! All right, we gotta keep this thing consistent then.
Let's see.
Everybody forgot about us.
Let's keep going.
Let's keep going, man.
If anyone has comments, questions, we'll get to them here in a minute.
All right, so we're talking demographics today. Ask any questions that you like, but we want to talk about the ultimate Houston real estate investing event. We're starting back up our meetup, which is awesome.
We are. So we have one of the biggest, if not the biggest, multifamily meetup in Houston. Usually get 70 to 100 people, but we are excited to start it back up and start it out with a splash. Splash started out with a thud. I don't know what to go. Right, we're part of a few other people. We're gonna make it big. We're excited, hoping to get 150 people out there.
Yeah.
And so for those of you here in Houston, July 1st, this Thursday. So be ready. I almost forgot about it. I was gonna plan something Thursday. I was like, wait a second. And so July 1st, this Thursday, we're excited.
Trying to do something with the family on the night that we're working?
If you're in Houston or anywhere in Texas, please come on out.
Yeah,
it'll be a good time. It's gonna be at Pitch 25 at 6:30. 7 o'clock Central.
And give some people some dirt. That's over by the stadium. It's over by George R. Brown.
Downtown Houston.
Yeah, so check it out. It's a bigger venue than what people are used to. We used to go to another place called Pub Fiction. This one's a lot bigger, but we're still going to have the mic and the screen, and we'll still do presentations and have great people come out and speak, and we'll have that as well, right? So go to disruptequity.com/July 1st, and that is a 1ST at the end there. But this is our meetup that we're really excited about. Been doing that for 5 years. Yeah, it's 5 years. I can't believe it. Wow.
On to another 5.
On to another 5, right? So It wouldn't be a Money Monday without talking about MFIN. This is our conference that is coming up, folks. Miami, Florida, July 24th. If you want a discount code, pop in DISRUPT. And you're going to get $100 off.
Yeah, we're excited. It's going to be a lot of new people. So for those of you that know us, to know our groups, it's going to be a lot of people we don't know. So I'm kind of excited about that, right? It's always good to meet new people. You never know who you're going to meet.
Yeah, we got Brian Tracy, which we're excited about, right? You know, for a lot of people that maybe don't know him, right? He does personal sales development, been around for many, many years. You know, he's going to be joining us remotely. We're excited about that. We got a lot of great panels, and we're going to do some breakouts. And more importantly, it's all about networking. Right?
Absolutely.
You know,
so we have some new changes we're going to do.
Yeah,
on
we're
that
going to facilitate that a little bit.
So we're definitely excited, but also who doesn't like Miami? So
I know, right? You know, and so we'll be hanging out
Friday. If you're located in the United States, which is all of you, I hope to see you guys there.
Yeah.
And let's see. So Jeff Greenberg says hello, guys.
Jeff, what's up, buddy?
Good seeing you guys. Good seeing you as well. If anyone has any comments, questions, please feel free to leave them.
All right. So one last thing, mfinvestornetwork.com. Pop in that coupon code, DISRUPT.
Did I interrupt you there? My bad.
You did. You're killing me.
I'm just used to
But
it.
we're almost sold out, just FYI. So if you are going to get your ticket, go ahead and book it now. Hotels in and around that area, you're probably going to have to look for the best price. But, you know, we're being told that those are getting booked up pretty quick too. So best to buy your ticket now, plan for it. People will be around all Friday, all Saturday. Most of us just go home Sunday, but I do know some folks that are staying a little bit later too.
Absolutely.
You know, I mean, it is Miami. So
there's a group taking a jet out of Dallas to get out there, right?
Yeah, no.
So they got a private jet. So
yeah. So if you're in the DFW area and you
let us know, we can put you in touch with those people.
Yeah, I think they're looking for the last couple guys. You know, good thinking. I forgot about that.
Private jet. So that's how much people love our conference.
So that's actually kind of cool. I was thinking actually about driving up there and then going out there with them, but you know, we had already booked our flights.
No, Ben.
Spirit Airlines.
You have too much work to do here. Right?
Spirit Airlines versus a private jet. I don't know. But what are we talking about whenever we come back, which is not going to be next Monday, but the Monday after?
Cap rates in multifamily real estate. So if you don't know what a cap rate is, stay tuned. It's important. You definitely should get to know it.
Extremely important. So check that out. That's going to be coming up not next Monday, but the Monday after. So, and then we'll be consistent after that, folks. Really, really excited about it. But I think we'll go ahead and wrap.
Let's call it a wrap. So we'll see you guys next time.